All those folks want to know what they're supposed to do when they haven't filed their returns. We're going to cover that now. I think everybody actually ought to stand up and give themselves a little bit of a round of applause for having all your patience or listening to all of this. All right. The Foreign Bank Account Report, the famous FBAR for short, is not a new form. If you can read the slide, you'll see that it was enacted as part of the Money Laundering Act of 1970. The FBAR is 45 years old, so it's certainly not a new tax form. Now, for most of you, you never heard of it before. Well, it's not a tax filing form. There's no tax associated with a foreign bank account report. It is a report of defined financial assets and accounts held outside the United States. That's important. If you have a bank account in the United States, it is not a foreign bank account. If you have a mutual fund in the United States, it's not a foreign bank account. If you have a mutual fund in Greece, it is a foreign bank account. So, anything outside of the United States is a foreign account. Okay? So, we start with the premise that it is only for foreign bank accounts. And remember, this is a U.S. law, so it relates to anything outside the United States. Actually, enforcement was minimal. In fact, I would say it was non-existent until 2009. In fact, if you were to go onto the IRS website in 2009 and you were to search for the big publication 54, which is the Bible for the annual filing by U.S. tax residents abroad, you would have found no mention of FBAR. So it's no wonder that it's sort of a late bloomer, as it were. Who must file? All U.S. citizens, legal permanent residents, any trusts, any estates, and U.S. domestic legal entities. The persons and entities listed on the prior slide have to file if they have a financial account located outside the United States and the total on deposit in all such accounts at any time during a calendar year exceeds $10,000, or roughly 8,800 euros, they have to report. I want to repeat those critical facts. It does not mean that you only report accounts that have more than $10,000. All right? That's not what the rule is. The rule is if you have one account with $4,000 and one account with $4,500, you have 8,500 euros on deposit. When you convert that to USD using the official U.S. use that on the official rate, you've got 8,500 euros. You have to report both accounts. If you have one account with 500 and another account with 5,000 and another with 3,500, you add them all up, 9,500 euros, you have to report all three accounts. And this is the high balance. This isn't the year-end balance, right? It's the high balance at any time during the year. Exceeds this number. Now I'll make my first commentary. This is a stupid law, and it's a stupid form. Right? It's a totally stupid form. It is useless. It's not a wealth statement. It's not an inventory of your assets. It's a totally stupid form. Which form? The FBAR. So why does it exist? Why does it exist? It exists because it was enacted in order to get around bank secrecy laws in 1970. So at the time, you can imagine somebody having accounts outside the United States in 1970 was a bit unusual. It didn't take into account the fact that there are now probably close to 10 million U.S. citizens living outside the United States. So I say it's a stupid form, but respect the form because the penalties for not filing it are awful. I want to underline those words, awful. If you simply ignore it because you think it's stupid or annoying, and it is going to be very difficult to get through all of this, and a pain. It'll be a pain. In any part of the anatomy you want to name, it's going to be a pain. But do it. All right. Now, the FBAR includes financial accounts over which a U.S. citizen has signature authority, even if the person has no beneficial interest in the account. And that includes an account of a company for which a person works. So I'm a senior vice president of ABC company here in Greece, and I'm the CFO, and I'm expected to sign checks and do other things, and I happen to be a U.S. citizen. I have to report those accounts on my FBAR. They're in Part 4. Don't shoot the messenger. The FBAR regulations make it clear, all right, that even if the U.S. person is not an owner of record, if the owner of record is that person's agent, or the U.S. person can control the account directly or indirectly, that person has signature authority. You may say, well, gee, my mom's got the account, not got my name on it, but anytime I ask her to take out $10,000, she takes it out and gives it to me. That's your account and has to be reported. Foreign financial accounts include bank, savings, checkings, and deposit accounts, and securities accounts. They include any account from which cash can be withdrawn regardless of what the bank calls it. Mutual funds and other funds in which a U.S. person has an equity interest, but stocks, bonds, and promissory notes are not foreign bank accounts. Now, each U.S. person must file his or her own FBAR. Married couples can only file a joint FBAR if all reportable accounts are jointly owned by them. So there can't be an account. One of the things that you do here in Greece that's very common practice is to have multiple members of a family on the same account. Sometimes it's mom and dad and daughter and son. Sometimes it's grandma, grandpa, daughter, grandchild. Sometimes it's aunt, uncle, and niece. Believe me, I've seen lots of these situations. If you are a named joint owner on a bank account, you must report that account. It's that simple. Even if the money, you say, it's not mine. It's not my money. But your name is on the account. And I know the reason for that. Certainly with elderly parents, you want to be able to manage the account for them, to be able to go to the bank, take money out for them. And of course, the other reason is, should they die, you don't want to go through the estate tax. You simply want the money to flow to the next generation without tax. All of this is perfectly legitimate, right? But the rule is, if you are a legal joint owner of an account, irrespective of whose money morally is in the account, and whether you would ever touch it, it has to be reported on your FBAR. Now, strangely enough, we have clients as young as 3 and 4 who file FBARs because grandma has left 50,000 euros to each of them some years ago, and they have a joint account, grandma and little Yanni or Katerina, right? Well, Katerina's a U.S. citizen. She has 50,000 euros in a bank account. She reports an FBAR. I said it's a silly form, and it is. And you say to yourself, makes no sense. And I agree with you. It doesn't make any sense. But it's the law. And it won't be the first law that never made any sense. The problem is the consequences of not filing can be quite serious. The other thing you need to know is, unlike a tax return for which you can get an extension, The FinCEN, that's the name of the form now. We still all call it an FBAR, but the formal name of it is a FinCEN 114, has to be received by the IRS electronically on or before June 30th each year for the prior year. And there are no extensions. So it's very important, if you're going to do this on your own, to make sure that you have filed your FBAR electronically by the 30th of June. Filing it on the 1st of July, it's late. Now, FBARs are required to be filed every year. The statute of limitations on an unfiled FBAR is 6 years from when it should have been filed. Remember I said earlier a tax return has no statute of limitations if it's not filed? In the case of an FBAR, that's not the case. If you hadn't filed an FBAR for 2007, and I dare say everybody in the room did not file an FBAR in 2007, it is statute barred. The IRS can't do anything to you about that 2007 unfiled FBAR. So any compliance that you're considering should begin with 2008 or 9. I'll explain why it might be 8 or 9 in a minute. Here's the problem. The penalty for non-willful failure, this is non-willful now, failure to file, is $10,000 per account per year, which is, think about it, if you had that 500 euro account and the 4,500 euro account and the 3,500 euro account and you hadn't reported it for 6 years, you might owe $30,000 a year, $180,000 in penalties for not having reported accounts worth less than $12,000. It's a stupid law, but it's still, that is what it is. No penalty is owed if the failure was not willful. Notwithstanding the fact that the service refers to non-willful penalties, the fact of the matter is they do not apply those penalties. That's what the law says, but that's not how it's applied. No penalty is owed if the failure was not willful, and the taxpayer can establish reasonable cause, particularly if each account is properly reported. Now, willful means a voluntary and intentional violation of a known legal duty. Willfulness does not exist if a person had no knowledge of the FBAR filing requirement, and the burden of proof in the case of trying to establish willfulness is on the Internal Revenue Service. Now, the next couple of slides really aren't probably very relevant to you because I don't think anybody in the room has really been willfully hiding money from the U.S. government. But willfulness, if proved, can be pretty disastrous. It involves significant civil and criminal penalties. The civil penalty can be the greater of $100,000 or 50% of the high balance in each account for each year that an FBAR is not filed. And criminal penalties are even worse. Now, the reason that the IRS pulled this old statute off the books and started to enforce it was for the very reason of those penalties behind me. Because that was a real club to hold over the heads of those high net worth U.S. resident individuals who were using UBS and other numbered Swiss bank accounts to hide income from the United States and to evade U.S. taxation. And when the IRS learned through the whistleblower activity in late 2008 of the prevalence among certain people of using these illegal mechanisms, it was able to pull out these kind of penalties and threaten both civil and criminal penalties to those who didn't step forward voluntarily. Now, all that I said before, the lack of a statute of limitations on an unfiled tax return and the penalties applied to unfiled FBARs, after several years of advocacy by us and others with the IRS, beginning in March 2009, we finally persuaded the IRS to adopt a program far more open to innocent non-filing. So what we've said to the service since March of 2009 is that there are hundreds of thousands, if not millions, of U.S. citizens living around the world who have no idea of this obligation to file this foreign bank account report. They live in a foreign country. They have their bank accounts in a foreign country. Isn't that a big surprise? And effectively, they pay tax in a foreign country. Most of them don't know they have to file U.S. tax returns, and they sure don't know anything about these foreign bank account reports because they don't consider their bank accounts foreign. And finally, in June last year, June the 18th, 2014, the service adopted the Streamlined Foreign Offshore Procedures, SFOP for short. And I have to say, it's a reasonably good program. I have some problems with it still, and I've hassled the service about them, but generally, it's a very good program because it really is an amnesty, which I'll talk about in a minute. It requires that you be a resident outside the United States for at least 1 year during the last 3 filing seasons. So if you were to file in 2015, you would have had to have been out of the United States for at least 1 year during the tax years 2011, 12, and 13. It eliminates all tax penalties and all FBAR penalties. It requires only the payment of tax due plus interest on that tax. It effectively offers an amnesty to Americans living overseas who can demonstrate non-willfulness. It requires the filing of 3 years of late returns, that is, returns that should have been filed already. And if you're doing the math, 2011 should have been filed in 2012, 2012 in 2013, 2013 in 2014, and we're now in 2015, and you've yet to file. You've got 3 years of late returns to file. It also requires 3 years of amended returns if foreign source income was not reported on a return that has already been filed. So if you filed a U.S. tax return and you haven't included your Greek source income or your French source income or your Italian source income, you only reported your U.S. source income, then you would file 3 years of amended returns to report your foreign source income. It requires the filing of 6 years of late FBARs, FBARs that should have already been filed. I really don't know why they kept that 6-year limit in, and I can't get a good answer, but they've kept the 6-year limit in. So if you're doing the math again, 2008, 9, 10, 11, 12, and 13 are all late. They should have been filed already. So to file an SFOP, you're going to file 6 years of FBARs. It also requires the filing of a certificate of non-willfulness. The IRS has developed a form for this called the Form 14653, and a statement of facts explaining your non-willfulness. Now, the IRS has refused to provide any guidance on what it means by non-willfulness. Now, why? Well, because they don't want to write your script for you. Right? They're not going to sit there and say, oh, here's all you have to do. Say this, and we know it's not willful. Right? We consider this the most important piece of paper in an SFOP filing, because this is your personal statement given under penalties of perjury that explains your non-filing and why the IRS should read your statement of facts as supporting your non-willful intent. Simply, I didn't know I had to. Signed, George. Not likely to give much explanation. And all SFOPs are filed with one filing center in Austin, Texas, where the certification and the statement are read, and if the statement is accepted, the return is then forwarded to another service center for processing. So I urge you not to take this statement of facts lightly. Now, there is no stated deadline for filing an SFOP submission. Currently, the program is unrestricted. So it's not like your tax return. Remember, your tax return has to be filed on the 15th of June, 2015. Your 2014 FBAR has to be filed on June 30th, on or before June 30th, 2015. Your SFOP filing has no deadline. The IRS has not said it has to be filed by April 15th, July 20th, October 28th. It has said nothing. It says it's open-ended. Now, remember, the SFOP are a modification of normal IRS procedures for innocent, non-compliant overseas Americans, and a great improvement over the previous June 2012 streamlined compliance program. Anybody who attended this session last year will have had me say some pretty harsh words about the SCP because I thought it was far too restrictive. It was still a very criminally minded program, and it really restricted the application to a large number of people who had some tax exposure. And lastly, you had to fess up all the facts without any guarantee that you'd be accepted in the program. So we considered it to be basically a useless program and told the service as much. Now, the SFOP, which I consider to be a reasonable program and very, very good compared to the alternatives, will not be available indefinitely. The problem is nobody can predict when it'll stop. When will the IRS terminate the program? Can't say. They've offered no assurances so far, and we've requested them, that there will be any advance notice of termination. So we have advocated that the service adopt a commitment that it will not terminate the SFOP without at least 6 months' notice. Now, I haven't received a response to that request. I don't know whether it will or won't. But all you need to understand sitting there is that the SFOP is a significant modification of the current law and regulations related to late filed returns and late filed FBARs. So it's a great opportunity if you're not in compliance now to get into compliance with literally no penalties on the FBAR side. The other option that has existed for some time is something called quiet disclosure. There, the taxpayer would file FBARs for 2008 through 13 and tax returns or amended returns for 2011 through 13 without actually advising the IRS. You just simply file them in the normal course. They go in the mill, they get processed. The problem is the IRS is on the outlook for quiet disclosure, and it's already made it clear that it doesn't like them. After the adoption of the SFOP, I think quiet disclosure is no longer a good option for taxpayers with reasonable cause because you've got a ready-made avenue to get in, get clean, and get out. Now, the Offshore Voluntary Disclosure Initiative I'm going to go through very briefly. It was initiated in 2009 and another one in 2011. The current Offshore Voluntary Disclosure is now a program. It replaced the OVDI in January 2012, and it's open indefinitely. But quite frankly, you'll see in the next slide, I'm not going to go through this one, I'm going to go here. The fact is that OVDP is for tax criminals. If you're not a tax criminal, if you've not deliberately been evading U.S. tax and avoiding the filing of bank accounts, you have no business even thinking about the OVDP. And anybody who advises you to file under that program should be disbarred or whatever. It's just not for you. Currently, the penalty in the OVDP is 50% of the high balance. Before June last year, it was only 27.5%. The question is, and you need to consider, is when the SFOP is terminated, OVDP or quiet disclosure will be the only available options. And the problem then is, will reasonable cause be available as a defense once the SFOP is terminated? Will the service assume anybody trying to file after whenever the program is terminated has been willful? Is there any the real question is there any real reason to run that risk? All right. The Foreign Tax Compliance Act, FATCA, which brought some of you here today because you got letters from either Alpha Bank or Ethniki or Piraeus Bank or something saying, please come in and identify yourself as a U.S. person, either because your Greek passport shows you're born in Boston or you've otherwise advised them that you're a U.S. citizen. FATCA was enacted by Congress in 2010 to address primarily tax evasion by U.S. citizens using foreign bank accounts. Congress didn't take into account the millions of U.S. citizens living outside the United States who were using foreign bank accounts for ordinary banking purposes. It took a twofold approach: the individual disclosure required on Form 8938 and foreign financial institutions' requirement to report on U.S. accounts to the IRS. Dealing first with the individual mandate, if you have, and we'll go through it in a couple of seconds, certain foreign financial assets of a certain value, you have to file a Form 8938 with your U.S. tax return. Congress didn't replace the FBAR. It simply added an FBAR-like document to your requirements and put it on the tax return. So you still have to file the FBAR. You may or may not have to file FATCA. Anybody who has to file FATCA is going to have obviously filed FBAR because the filing thresholds are quite different. Form must be filed with the U.S. tax return, and it was first required with your 2011 U.S. tax return. So if you filed a U.S. tax return for 2011 and you haven't disclosed foreign income on that return, and you didn't file a Form 8938 with that return, then you're going to be filing under the SFOP to correct both errors. Okay. Your filing status and your residence governs the filing thresholds. So, filing status. If you're single or married filing separately and you live outside the United States, the total value of all foreign financial assets, and we'll get to those in a minute, exceeds $200,000, again, this is all equivalent to $200,000, on the last day of the year, or $300,000 at any time during the year. So those two numbers, if you're single or you're married filing separately, and your aggregate foreign financial assets at the end of the year are $200,000, or at any time during the year exceeded $300,000, you have to file the form. It's an either-or test. If you're married filing jointly and you're living outside the United States, the total value of your foreign financial assets is essentially double, $400,000 on the last day of the year, or $600,000 at any time during the year. The amounts are much lower for U.S. persons living in the United States. It's $75,000 for single persons and $150,000 for married couples filing jointly. Accounts at foreign financial institutions defined broadly to include insurance companies, private equity funds, and other investment entities and vehicles not commonly thought of as financial institutions. We think of banks primarily as financial institutions. We don't think about, for example, mutual funds, or we don't think about insurance companies as being financial institutions. But under FATCA, they are. It clearly includes all bank accounts of all kinds. Some other little hidden gems. Stock in foreign companies held through a foreign financial institution. So, for example, if you have a stock trading account, that would be included as a foreign financial account. Stock in private foreign companies. You and three partners have created a Greek business. You've incorporated it as an SA, and you have 30%. You're a U.S. person. The other people are not, and you have 30% of the shares. You have to report the value of those shares on your 8938. You and a couple of partners have created an OE under Greek law, which for U.S. tax purposes is a partnership. You're a 40% partner in that partnership. you have to report the value of your 40% interest in the OE on your 8938. The value of foreign mutual funds, and probably not a big item on your list, precious metals held indirectly through exchange-traded funds. Foreign financial assets do not include personal property such as artwork, precious metals, jewelry, real estate held directly. Now, let me explain that just a real quick bit here. If you and 2 or 3 friends have gotten together and created an SA to become a developer in Greece, and you've acquired several properties, and you now own them through an SA, that the value of your shares in that SA is reportable under the private corporation. If you and your friends own it personally, that is, you go in as a joint venture, for example, and we own it in the names of Yanni, Theodore, and Katrina, then that's not reportable. So any real estate you own personally in your own name, either you jointly with others, is not reportable as a foreign financial asset. Social benefits provided by foreign governors are not considered foreign financial assets. What are the failure to file penalties? Well, there's a $10,000 penalty immediately if you don't file the form. There's an additional $10,000 penalty if it's not filed within 90 days of being notified of an initial penalty. At the end of the day, the total could equal $60,000 for failing to file the form. Now, the second part of FATCA is the requirement that foreign financial institutions report U.S. accounts. Well, why do they do that? Well, FATCA imposes a 30% tax on all U.S. transactions of foreign financial institutions that do not agree to share U.S. account information. Essentially because most foreign financial institutions, in fact, have substantial assets invested in the United States, that effectively means that they're going to cooperate. In fact, there are now 145,000 financial institutions around the world who are signed up for the program. The United States has developed 2 model bilateral agreements. They're called IGAs, Intergovernmental Agreements. Model 1, the foreign financial institutions report accounts to their own governments, which pass account information on to the Internal Revenue Service. Model 2 is a foreign financial report accounts directly to the IRS. The United States is negotiating FATCA intergovernmental agreements, and according to PricewaterhouseCoopers, as of the end of last year, there were IGAs in force or treated as in force with 115 countries. And as I said to you earlier, over 145,000 foreign financial institutions are registered for the program. The United States and Greece have entered into a Model 1 IGA, which is treated in force as from the 30th of November 2014. Now, how is a foreign financial institution going to know who is a U.S. person? Well, first of all, they're required to conduct some due diligence, which is not terribly carefully defined, but will generally gather and retain enough data about account holders to determine if the account holder is a U.S. person. Now, most of you are being asked to complete and return a Form W-9 or a W-8-BEN. And I'll get into those forms in just a second. But typically, the bank is going to look at U.S. birthplace, automatically a U.S. citizen. Driver's licenses, passports, addresses, employer. I mean, they're going to look for some indicators, and those will be their indication that you are a U.S. person, and therefore they're going to ask for one of those forms. Well, I want to talk about 2 forms, the W-9 and the W-8-BEN. W-8-BEN. U.S. citizens may not complete and deliver a W-8-BEN. Whatever your bank tells you, the only form you're allowed to sign is a W-9. That is exclusively for U.S. citizens. And it says right on the W-8-BEN, if you're a U.S. citizen, do not sign this form. Yeah, well, but you now understand W-9. Yeah. Do not go to your bank, go to the IRS website, do not go and download a W-9, fill it all out, and then go and give it to all your banks. Don't do that. You have no obligation to do that unless they ask for it. So if the bank comes and asks you for a W-9, you're required to give it to them. But don't paper the town with your W-9. Why not? Because it has your U.S. Social Security number on it. Right? Your U.S. Social Security number will be on that W-9. And you want to make sure that that is handed individually to the bank at the branch that requested it. And my recommendation is you write the name of the bank and the branch that requested the form in the section on the W-9 that says requester or requested by. And you keep a copy. So now you know everybody who has a copy of your W-9 and to whom it's been given. The Internal Revenue Service will never communicate with you directly by email or fax. So if you've received a W-8 Ben by the internet, by email, or you receive a W-9 by email from somebody reporting to be the IRS, it is a hoax. It is a classic internet phishing expedition. Because if you look at the W-9 form on the IRS website, you will see that there is no detailed information about your bank accounts because that information is always optional. And I recommend strongly that when the bank asks you for a W-9 and you give it to the bank and it says account numbers, I always say known to the bank. Why on earth are they asking me what my account number is? They know what my account number is, and so I don't need to write it down. Do not ever fill out any forms sent to you purportedly by the IRS through the internet, by email or fax. They are all hoaxes and designed to get confidential information from you to enable the crooks to either take over your bank accounts or otherwise compromise your financial information. All right. This FATCA agreement, this IGA that the United States has entered into with Greece, is essentially modeled on the same thing as with Mexico. So because I had the Mexican slide already done before Greece entered into the Model 1 IGA, I decided just to leave it up there. All right. And you can substitute in your mind Greece for Mexico if you wish. Under the Mexican IGA, the Mexican government will annually provide to the IRS the name, address, U.S. Social Security number or tax identification number of each U.S. person who is an account holder. The same information will be provided for entities controlled by U.S. persons. It will provide account numbers, the name and identification of the FFIs, meaning the foreign financial institution, where the accounts are held, the average monthly balance and value during the year, the gross amount of interest paid on depository accounts, and the gross amounts credited or paid to non-depository accounts, including redemptions. Yeah, oh, good. Hit the wrong button. What are the key implementation dates? Well, tax returns for 2011, as I've already said, should have included a Form 8938. As of July 1 last year, these deadlines were pushed back a little bit. I think the July 1st deadline was really moved to January 1, 2015, which is why you're getting the letters now. But for most people who are opening new accounts, so if you went to the bank and you wanted to open a new account, you would have been put through this FATCA due diligence process of determining whether you are a U.S. person, and you've been asked to file a W-8 or a W-9 in respect of the opening of that new bank account. The first FATCA reports were due on March 31st, 2015, and again, I believe that date has been moved back a little bit. At the end of last year, FFIs were supposed to report owners of pre-existing high-value accounts of $1 million or more. Again, I don't know if that date has been moved back or not. By the end of this year, foreign financial institutions must review all pre-existing accounts with balances above $50,000 to determine if any are U.S. accounts. And again, that may be pushed back 6 months to June of 2016. Now, I've been asked a few questions earlier about, what do we do? The provisions for U.S. tax compliance, I regret to say, is far more complicated for citizens of the United States living outside the U.S. than it is for citizens living in the U.S. It's a practical problem. But all provisions of the Internal Revenue Code apply. So, for example, they're going to affect people differently. Gifts from foreign persons or corporations. If your mother is not a U.S. citizen, and she makes a gift to you who is a U.S. citizen, that is a gift from a foreign person. If your brother and your sister, who are not U.S. citizens, give you a gift, that's also a gift from a foreign person. Now, it seems odd, but the rule was adopted without an understanding of how many dual nationals live really outside the U.S. Mutual funds. A mutual fund owned at a Fidelity account in Boston will be treated differently than a similar fund owned in Athens. And it will be tax disfavored with certain compliance obligations. Retirement savings. If you set up a 401k in the United States, that's a tax-favored retirement investment account, or an individual retirement account, or a Roth IRA in the U.S. Those are designed to encourage retirement savings. If you set up a 401k in all but name here in Greece, it will not enjoy tax-favored status in the United States. Pension plan contributions. Typically, a pension plan contribution is deductible. The employer's contribution is not added to your income, and your contribution is deducted from your income. That's not the case for a U.S. citizen living outside the United States. Now, we have made a point with the service that we believe the Treasury has the power to create transition rules that would moderate some of these disparate treatments. But unfortunately, the law is written as it is. Participation in corporations or foreign partnerships, again, require different reporting. And the fact is they create many traps for the unwary. I said to you earlier that the Form 1040 is simply a summary. And everything else that goes with the return, the schedules and the other forms, are all dictated by other facts of your financial existence here outside the United States. So, for example, if you and your brother are both U.S. citizens and you create a souvlaki store here in Athens, a souvlaki restaurant here in Athens, and you create a corporation to own the restaurant, to operate it, that Greek corporation is now something called a controlled foreign corporation. Why is it a controlled foreign corporation? Because it's owned more than 50% by U.S. persons. And it is subject to a wholly different reporting and tax regime. Now, a word to the wise. In the land of the blind, the one-eyed man is king. And unfortunately, for most people, tax is an area that just they glaze over. They look at it, and then they got to deal with Greek tax, and then all of a sudden somebody tells them, you got to deal with U.S. tax. And then they hear all this stuff, they go pick up the regulations, they go pick up the instructions, they read 3 lines, and they go, oh my God, what is this saying? And I've seen so many, just totally confused. So for many people in your position, it's not a lack of intelligence, it's not a lack of sophistication. In many cases, it's simply, you're not doing this every day. You're trying to read jargon, and you're trying to read legalese, and you're trying to read tax speak. So in many ways, it's not something people just want to deal with. A lot of lawyers don't want to deal with it either. So that's why I use the term blind. It's not because people are really blind. And so somebody knows a little bit maybe far more dangerous, because you're not going to know. So U.S. tax compliance requires a lot more than simply plugging numbers into a tax preparation program. If you don't know what forms to file, then you're not going to create the correct forms. You may plug the right numbers into a 1040 or not, but the fact is you may not know what other documents need to be there. So what I give people is a due diligence list of questions when there are lots of people who are very qualified to do these returns. What you need to do is make sure that you do your due diligence in terms of who these people might be. You want to ask, do they have any formal U.S. tax training, especially in regard to the taxation of U.S. citizens living outside the United States? So you want to know they've got some formal training. They may have a PTIN, a Preparer's Tax Identification Number, but that doesn't mean they have any training. Can you serve as my power of attorney on a U.S. Form 2848? The Internal Revenue Service has an enabler, a document called a Form 4828, which allows certain persons, lawyers, accountants, and other tax professionals, to be appointed by you to be their U.S. tax representatives, which gives that person the right to talk directly to the IRS about your tax case, to retrieve your tax information and information from the IRS website, and to otherwise represent you before the Internal Revenue Service. Last question, have you handled an IRS examination of a U.S. tax return filed by a U.S. citizen living outside the United States? I mean, have they actually had to confront the IRS when they're examining a return to, in fact, know what the service is looking for, how it deals with particular foreign source income? Remember, your Greek tax return is not relevant to a U.S. tax return. You can't just translate it from the Greek return to the U.S. return, because the U.S. requires you to report your income as required under the Internal Revenue Code. The numbers will come from your Greek return, but how they're translated onto the U.S. return can be either good for you or not. And what you want is the best possible translation. So ask those questions. Now, you can visit our website at www.flotco.com. You can click on our Facebook page at the bottom of our homepage. And if you like us, you can receive periodic updates on U.S. tax and financial account compliance, news on IRS announcements, and other useful information on U.S. tax. We have a special website called U.S. Taxed Abroad. I think it's, all of a sudden I've forgotten, it's called, I think Citizens Taxed Abroad or something like that, which you'll find on our website. And we do work here in Athens. I mean, we're not the only people who can do this for you, so I don't want to give you that impression at all. I just want you to make sure you do good due diligence. I am in Athens every other month, and obviously in today's world with Skype, email, telephone, fax, the time difference between here in Athens, between Washington or Arlington and Athens tends to work generally in the Greek favor, because you guys are home at night at 11, 12, whatever, and we're still in the office working away at 4 or 5 in the afternoon. So the difference isn't that big. A lot of the questions can be answered, often in a half an hour Skype call. We can really explain what has to be done and then sharing the information. All of our tax documents are sent through a secure email system, which we've set up in our own system. Thank you very much. Appreciate your time. And remember, questions? How are we doing for time? Ooh. Ooh. All right, we're starting over here. All right, well, Katrina, you got the people over there. We'll start over there. Now, folks, those of you who have to leave, that's fine. Just please try and go quietly. The rest of you who are sitting here, please listen to the questions and the answers. All right, so we don't have to repeat the same question and get the same answer. All right, fire away.
Okay. Site about Greece, there's said that there's a substantial agreement, but there's no signed agreement yet, and there's no PDF for the agreement. So, is it true? Does it mean that it still has to be voted in our parliament, or it has nothing to do with it?
I don't know. What I do know is that according to the Internal Revenue Service, Greece and the United States have agreed to a Model 1 IGA, and they're treating it as in force from the 30th of November.
What is the difference, substantial agreement to the signed agreement? No, you don't. Okay, sorry. And
what you have to know is that Greek banks are collecting the information to provide it to the IRS through the Ministry of Finance here in Greece.
So my question is, what are the banks going to do with the double nines? Are they going to keep them? Because if we have an account of under 50,000, we're not reportable. But they still ask for the W-9s. Are they going to send them to the IRS, or are they going to keep them?
The W-9 form does not leave the bank. It's not filed with the Internal Revenue Service.
All right.
Okay. The W-9 is solely for the withholding agent, which is the bank in this case. And in the FATCA environment, the W-9 is their evidence that they have done due diligence to determine who is or who is not a U.S. person.
Thank you very
much. Over here?
Can you hear me? Okay.
I can hear you.
So I'm a trailing dependent spouse married to a non-U.S. foreign diplomat. It's kind of a mouthful. I haven't filed a U.S. tax return for 25 years. My husband does not have to pay taxes as a United Nations director to his home country in Italy. My question is, but I've never filled out an FBAR. I'm a signatory on accounts in Switzerland and here. Do I need to fill out an FBAR even though it's not my money?
Yes, ma'am.
Okay, and is the long arm of American IRS going to be fishing around? I have no earned income.
But if you are a signatory on an account in Switzerland, I promise you, your name is already on a list.
But we left.
No, I'm serious. Switzerland.
Anybody have any Xanax?
The Swiss entered into a special arrangement with the U.S. Department of Justice, and I can tell you how many people have come to us just for that very reason.
Okay, but there are no large financial instruments involved here. We're talking about paychecks from the United Nations being deposited into an account.
If it's over the threshold, it has to be filed.
Okay, so 6 years worth of FBARs and a statement, and I should be off the hook.
Well, I said earlier I'm not giving legal advice from here. If all that you say is all that needs to be said or known about your fact situation, the answer would be yes. But I don't think you need a certification. I think if all you're missing is the FBARs, there's a special procedure that you can follow that doesn't involve the formal certification on Form 15643.
Okay, so can we contact you and
yes, please,
have a paid conversation, and then you'll tell us what to do?
Yes.
Okay.
Upstairs.
Sorry, one quick clarification and a question over here. We're under no obligation to identify ourselves as American citizens to banks. It's their problem. If they can't find us, it's their problem. Correct? No, sorry. Sorry, Claire. I understand we have an obligation to report our accounts to the IRS, but do I have to go to my bank who hasn't sent me an F9 or a W9 yet?
I told you no.
So it's their problem.
It's their problem.
Okay. Sorry, just a question. The streamlined the program's been up and running now for 8-9 months. Do you have any sort of unofficial feedback how they're treating expat? But you don't
it's
have.
Too early.
It's too early.
And in fact, the IRS last week at a major tax conference made it clear that they don't intend to provide any feedback. They're not going to. You don't get a clearance certificate from the IRS. You file a return in the United States, and what you want is not to hear from anybody. It's not a very satisfactory system, I have to say, but you get used to it. I mean, unlike here in Greece, you get a clearance certificate and you know, okay, I'm good. In the U.S., you file your tax return and the clock starts ticking, and 3 years later, you say, okay, that one's on. But in the SFOPs, what we've taken as sort of a guide is when we file an SFOP, what we will do is about 6 to 8 weeks later, we'll start to pull what are called account transcripts for the taxpayer. And that lets us know whether the service has in fact processed the return. Because the route that the SFOP filing takes is it goes from our office to Austin, Texas, to a particular office there that goes through the SFOP filing. And there's a very strict set of instructions as to how you have to file one of these SFOPs. We suspect what's happening is that they're being reviewed there, primarily because the first document has to be the 14653 and the statement attached to the first set of documents. So effectively what we think is happening is that they're reviewing them, and if they are, we don't know this to be the case, but if they decide to push them on, they will then send the returns on to Ogden, Utah, which is where they process returns for persons with addresses outside the U.S. And we can see that when they actually show on the transcript that they have effectively processed the return and posted it to the account. Now, what we don't know is it's from that point that the return will either be selected for exam or not. And typically, it'll be at least 15 months after filing before you'd get any indication that the return will be going to exam. Now, if it does, and you're checking the transcript periodically, you'll know that, because it'll show in exam on the transcript. We finished there, now we're over here.
So there's a case that F-bars were filed in all previous years. Up to now, and everything was okay. The thing is, we're never asked about a W-9 by the bank. Should we wait for the W-9 from the bank?
Yes. Yes.
Always wait. Okay.
Always wait.
Okay. The second question is, again, the F-bars were filed, but there was one forgotten account. It was a joint account with a mother who was taking who had the pension deposited in that account. Never had any financial interest in that account. The thing is, now we have to submit amended F-bars for the previous years?
Yes, sir.
Okay. And also amended tax return, even though we had no gain from that account?
No. If the only error that you're looking to correct is that you didn't report an account that should have been reported, and then you'd go to that year, 2011, 8, 7, whatever, not 8, 7, 12, and you'd file an amended return for that, amended F-bar for that year and explain we inadvertently dropped Part 3 account.
And even though this account, the name was taken out of that account 2 years ago.
I'm sorry?
The U.S. citizen who was the second person in that account just got out of the account 2 years ago.
Well, I told you it was a silly form. The fact is that if you have a U.S. person who's on the account, and they're no longer on the account, but they were on the account in 2008, 9, and 10, and the account wasn't reported, you amend the F-bar to add the account that was missing.
Thank you.
Over here.
Assuming that a bank has not requested a W-9, should we go ahead with declaring the bank accounts on the F-bar?
Absolutely.
Practically speaking.
Absolutely.
Absolutely.
The issue of the bank asking you for a W-9 and your legal obligation to file or report the account are totally independent.
In practice, though, we can assume that the bank would not submit those accounts.
I don't know that you can assume anything.
Okay.
I would not advise it. Okay. With the SFOP, is there really any point to try and bob and weave around it? If you've got an account that's, I don't care, it's got $1 million in it, and you haven't reported it, you know if you've reported your income accurately and you have a true reasonable cause, you're not going to suffer any penalty.
Well, the only reason I can think of is that, you know, because of the way that it's reported in the FBAR with the maximum balance, that it might be construed as a wealth statement and a misleading one. Are you saying that this is definitely not the case?
This is definitely not the case. I mean, the IRS is going to, what the IRS is going to do is it's going to correlate now from 2011 and on the FBAR with the FATCA report. So if you have $1 million account, for example, I mean, think about this. You've got $100,000 in a CD and you put it in Piraeus Bank in January because they got a great rate. Come April, you say, you know what? Ethniki Bank's got a much better rate. I'll move the $100,000 to Ethniki. Come September, you say, you know what? I like the rate at Alpha Bank. I'm going to move it to Alpha Bank. So we got $100,000, $100,000, $100,000, $100,000. On the FBAR, it looks like we got $400,000. So, I mean, there's a ready explanation. So you report all four, and you don't worry about it. It's a nonsense form, right? And the problem is, though, if you don't report, then you got to worry about all these penalties, which you really don't need to do. You're cheating, you're cheating, you're cheating, you're cheating, you're cheating. Upstairs.
Hi,
Hello.
I'm here. Here.
Ah, there you are. It is helpful upstairs when you raise your hand because I got lights right in my face.
Sorry.
No problem, no problem. I can see you now.
Okay. I was born in US. I never lived there. I work here. I pay my taxes here. I do everything here. Do I have to do all this stuff?
What do you say, folks?
Because,
Yes.
yes.
Huh?
Otherwise,
I'm sorry, I can't hear you.
what's the penalty if I don't? What is going to happen if I don't do all this
Well,
stuff?
I mean, again, depending on your filing situation, whether it's both with tax and with FBARs, I mean, you're going to be under the SFOP. I mean, unless you're hardly a tax criminal. So
I'm not.
my point is, you're going to go through the SFOP and you'll end up paying nothing.
Yes. But I have
No
to-
penalties, no interest. I mean, unless you owe tax.
Unless I'm what?
Unless you owe tax. I mean, it is highly unlikely if you've been living and working in Greece
No.
that you'll pay any tax to the United States.
No, I don't.
Because your tax rates in Greece apply at lower income levels at higher rates than they do in the United States. So if you're earning 20,000 euros, you're going to pay far more tax to Greece than you'll pay to the U.S. on that 20,000.
Okay, thank you.
Okay? We go over here next.
Everything was fine until the second half. I am a partner in an AMKE, an αστική μη κερδοσκοπική εταιρεία. And I also have the fortunate position of being the legal signatory, and I have banking privileges. The Greek government doesn't ask me for any of this. It's an all-volunteer organization. And do I have to, so, I mean, you're going to say yes, but I guess I have to do this now? I mean, this is insane. That I have to
Yes,
file
it's insane,
on,
and yes, you have to do it.
because we're in the process of shifting from Eurobank to Piraeus, and I filed with my stuff with my American passport, and he didn't sort of say anything.
You can't rely on him, though. I mean, the fact is, the answer is it's insane, and you have to do it.
So, but what is this form? Do I get something from the bank?
What form?
The FSPO, whatever. This.
Well, if you want to do it on your own, you'll download the SFOP form from the IRS website.
Or I ask you, but I mean, do I need something from the bank?
No, you need nothing from the bank.
I just told them that I had this account, and
You just report it. If the account is for your organization, and of which you're a legal signatory, and the bank balance in 2011 was 8,000 euros, you report 8,000 euros in Part 4 with the name of the organization and the address and your role.
so there's no liability.
Huh?
There's no liability.
No.
Oh,
No.
okay,
No.
I feel better.
Okay, over here. Well, I mean, why don't you just get in line over there, my man, dear, and we'll be fine, okay?
I just wanted to make sure I never had more than $10,000 in any of my accounts. Do I have to file the FBAR?
Sorry, you've never had 10,000 in any of your accounts.
That's correct.
But if you added up all your accounts together, would they total 10,000?
No,
Then you don't have to file an FBAR.
I don't have to file. Like
Right.
every month I get a pension and I cash it in, never more than 10,000.
The point is, if in all of your bank accounts you add them all up at any time during the year, they don't get to 10,000 USD, you don't file an FBAR.
Okay, thank you.
Upstairs.
The question is on the FBAR, and just to continue on the example that you gave us, where the money is not yours and you're the CFO, do you get like a waiver from the Treasury because you're a signer on 200 accounts? And
Well, you don't get a waiver. You just report the account. There's nothing to be waived.
No, the thing is that your employer does not want...
Please, folks.
In a case where your employer doesn't want to get involved with the U.S. and doesn't want to report his accounts there, and you're being employed based on your merits and on your academic background and stuff, and you're the CFO. Now, being a CFO,
All
you're
right,
the signer.
If you're using us, I'll just tell you what my legal opinion is.
Yes, please.
If you've got a situation where you're an employee and you have no interest in the bank account,
Correct.
and you have a real concern that your employer does not want the account disclosed,
And he stated that.
okay, then you don't report it.
At your risk?
You don't report it.
At whose risk? At your risk.
No, the money's not yours. The IRS can't take something that's not yours. I mean, as a practical matter,
Yeah.
I mean, I know this is being recorded and it's going to be on the U.S. Embassy website, but I'm perfectly willing to defend any person who, because their employer simply says, I do not want this account reported. I don't care that if you're a U.S. citizen. The money in this account is not yours, right? And I don't authorize you to disclose it to the IRS. The taxpayer in that case doesn't report it.
But
now,
then-
there are two questions. First of all, since the company that owns the money is not doing business in the United States and has no U.S. source income, there's the practical question about how the IRS is ever going to find out about the account anyway. And it won't be reported as a U.S. account unless you, as a U.S. shareholder of the company that owns the account, controls the company.
No,
If you don't, let me finish. If you don't control the company, all right, and you're just an employee, it will not be listed as a U.S. account, so the IRS is never going to hear about it anyway.
They would, because from the FETCA point of view, the bank has asked the company to state all the American signers.
Well, that's a different issue. I mean, I told you, if the bank has asked for all the U.S. signatories and the bank is going to report the account as having a U.S. signatory, then I can't tell you what to do. Personally, I wouldn't file it. I would leave it off, and if the IRS challenges me, I'd put them to the dumb judge test. I would say that while you're cheating and jumping in line, very Greek of you, I have to say. The answer is I'd rather have a client with a contemporaneous document explaining the situation than to try and make one up after the fact. Does that answer your question? A contemporaneous document from your employer saying, do not report this account, is a much better document than trying to make it 5 years from now when the IRS is examining the... Over here. No, the woman standing there with the microphone.
Hi, thank you. Just a few questions. Those subject to FATCA are U.S. citizens and permanent residents from what I saw on the slide. Does permanent residents include U.S. resident aliens?
Yes, ma'am.
And why is it that if you are a U.S. citizen or resident alien living in the U.S., the threshold is lower than the U.S. citizens living abroad?
Because Congress felt that anybody living in the United States that had big accounts overseas were probably likely to be cheating.
Okay. That's a good answer. Also, last question. If, let's say, there's an investment portfolio here in Greece, a foreign investment portfolio that has 4 owners, they would report the maximum, and only one is affected by FATCA. They would report the maximum value of that entire portfolio.
Correct.
And the associated dividends, gains, etc.
No. Remember, the FATCA form and the income tax form are quite distinct.
Mm-hmm.
If the person you're talking about, who's a U.S. person, is a 1/4 interest in the portfolio account,
mm-hmm.
and is entitled to only 1/4 of the income, the person will report the 1/4 of the income in the appropriate place on their tax return, mm-hmm. and they will report the full value of the portfolio account on their FBAR and on their FATCA form.
Okay.
Okay.
However, on the FATCA form, there's also a section that has income, gains, and for
Right.
that, they would report the full,
No, they would report
only
their
1/4.
income.
Okay. Thank you.
Mm-hmm. Let's see, we're over there, we're over here now.
I would like a clarification question here. The FSOP has to do with returns or also with the FBAR?
Both.
Both. So FSOP, the FBAR is, I would say, part of the FSOP?
Correct.
Okay, so it's not a separate form. It's just a procedure. FSOP is a procedure of doing the reporting of this FBAR.
The SFOP is a set of procedures that allows the taxpayer to file late returns and FBARs without a penalty. The FBAR form must be filed electronically. It not be filed on paper. So it has to be filed electronically. So you can't file it with the SFOP because under the SFOP, the tax returns and the certification and the statement of facts have to be filed on paper with original forms and original signatures.
Okay.
Okay? So you have you or your advisor goes and files the files the FBARs electronically, then files the SFOP on paper with the IRS, asserting that the FBARs have been filed, and then enclosing the appropriate tax returns and other certifications with the SFOP submission.
Okay, so you have to do both, actually? After, this is what I'm asking. Do you have to do the FBAR and the FSOP? Can't I just do the FSOP for the past 3 years and that'll be the end of it? Or
No, not if you have an FBAR obligation. If you have to file an FBAR, you have to file an FBAR.
Right.
Okay, so if you don't have to file an FBAR, you don't have to file an FBAR.
I have to file an FBAR because
So you have to file
account.
6 years of FBARs and 3 years of tax returns, and you have to do both. You submit the FBARs electronically to the IRS website at FinCEN, and you submit the tax returns on paper to the IRS in Austin, Texas.
Okay, because basically I haven't had income greater than $99,000 per year. So I am qualified under this exemption per year. So I don't have to do the exemption, that I don't have to file any returns. I have to report the FBAR.
No, you have to file a return. You're confusing the fact that you may not have to pay tax, but you have to file a return. You must file a return.
Can't I just do the 2555 form, which is...
You cannot. You have to file a return.
Okay.
And it's that simple. You have to file a return.
Okay.
Okay? All right, we're upstairs next. Folks, we're probably run out of time here, but let's go for one more set of questions around. Upstairs, anybody?
Hi, I'm up here.
Okay.
So I have to do SFOP. With the deadlines coming up 15th of June for the 1040 and the FBAR, do I submit those and then and in parallel go through the SFOP procedure for the previous 3 and 6 years, or does doing the SFOP now also cover what needs to be submitted by June this year?
No, you have a choice. I mean, you could, if you've never filed a return before, I mean, you could wait and you've never filed an FBAR before.
I've never filed an FBAR, and I haven't filed a return since 2012, 2011, when I lived in the U.S. for a couple of years, and I filed when I lived in the U.S.
All right, well, I mean, the fact is, if you want to wait and have your 2014 return in FBAR be late, and then hustle up and file your streamlined filing, then you'd file for 12, 11, 12, 13, and 14.
Okay.
But for most people, particularly folks filing amended returns, you're going to have no reasonable cause to delay. If you try and file an amended return after after you file your 2014 return and claim you didn't know, I think you're going to get shot down.
Okay. And one more question. I understand that the FBAR is for any account that I have anything to do with, even if it has nothing to do with my money. Does the same apply for FATCA?
Yes, sir.
Okay. Thank you.
All right, we'll go one more round, and then we can talk out in the hall, but I gotta get out of here.
I want to verify something. There was a lady who said, I've been here 36 years, I'm married, I'm a housewife, I'm married to a Greek, I had no personal income of my own, and I haven't filed for 36 years. Last year, I got my Social Security, and it's in a joint bank account with my husband. Do I have to file? You said to this lady she didn't have to file. I was under the impression that everyone has to file. I didn't know until now, but...
Well, if you look at the list, there's a slide in the slide presentation that describes how much income you have to earn in order to have to file.
Yes. But
So the woman who talked to me earlier said she only had U.S. Social Security.
That's all I have also.
All right, so if all you have is U.S. Social Security, you have no other income, and your U.S. Social Security is less than $25,000, then half of that is going to be below the threshold. You don't have to file.
Okay. The second question quickly is, my father was American citizen, naturalized, Swiss, and before he died years ago, 2003, he left a living will so that I wouldn't pay inheritance tax, which went through in the United States. It was fine. I paid all the whatever you have to do there. There was a small amount of money in Credit Suisse in Switzerland. They say that they cannot give me the money unless I have a certificate of a will stamped by a judge in California. Because he made a living will, he made himself an institution, the judge will not stamp it. So therefore, I have no way of getting the money. Do I have to report that on the FBAR?
Oh, wow. Good question. Good question.
I mean,
I'd have to research that, ma'am. I couldn't give you an answer off the top of my head. No.
They won't give me the money.
Well, but if it's yours in some way, I don't know. I don't know the answer to your question.
My father paid, he deducted the Swiss taxes as long as he was alive and reported it in the States.
But I can't answer your question.
Okay.
Sorry, ma'am.
On the FBR accounts, do they pay taxes on the FBR?
No.
No. Okay. Thank you very much.
One over here.
Are we talking about closed accounts for the last 6 years also?
If an account was open, technically, if an account was opened in 2008 and closed in 2009, if that's the case?
Yeah, well, account that it's not active.
When you say a closed account, if an account has been closed for the last 6 years, then why would you report it? If the account was open in 2008, closed in 2009, and has been closed since 2009, you report it in 2008, 2009, and you note that it's closed from then on.
Okay, another thing. My name is on my U.S. passport is like it's different from my Greek identity card. So does this complicate anything? Because my U.S. name is Bill, my name in Greece is Vasilios, my bank accounts are Vasilios, so they know me as Bill, and it's like, what is...
Well, for many Greeks, this is a problem because the anglicization of the names. What you do is when you file your FBAR and tax returns, you want to use the same name that appears on your Social Security card.
Even if my bank account is under Vasilios?
Doesn't matter. You want to file using the name on your U.S. Social Security card. You can go to the U.S. Embassy, you can take your Greek identity card, you can take your U.S. Social Security card and your U.S. passport, and they will put a notation in the back of your passport in the notes section indicating that this person is also known as Vasilios whatever.
And about loans, I didn't hear the word loan. If a loan was taken and money was deposited in an account, which it's not a revenue or income or whatever.
But if you took out a loan and the money was deposited in an account, the loan is included in the account. The loan balance. So
that counts.
It counts.
As a number, as a figure.
Right, as an amount, yeah.
Okay, and payments and repayments of the loan does not...
Payments of the loan are irrelevant. Remember, it's a bank report, it's not a tax return.
Okay. So, in other words, the whole thing that I heard is that U.S. person, American citizen. Does the dual citizen count anywhere as a different status of...
No.
Nothing?
No.
Okay.
Okay, last question up top.
Hi. Hypothetical question here. Let's say that we don't actually do any of these things and report anything and FATCA, all that. Is in the U.S., if you don't do your IRS, your
I'm sorry,
1040, they have IRS seizures because you're in the States, right? But we're in Greece, we're in Europe. What are the practical ramifications of not following through with any of these different, let's say, disclosures?
Yeah. The United States and Greece, like most of the major treaty countries around the world, have something called a mutual assistance provision. If you owe U.S. tax, the United States government can come to the Greek tax authorities and ask them to collect that tax on behalf of the United States. The same thing is true in reverse. If you owe taxes to the Greek government, and the Greek government is aware that you're in the United States, it can seek the assistance under the mutual assistance provision to collect the tax in the U.S. using the IRS collection methods. So anybody who sits and thinks, well, gee, all my assets are in Greece, I'm cold and I don't, hell with these people, right? You need to keep in mind that the reality is that the mutual assistance provisions of the treaty give the U.S. government the right to seize assets using the Greek mechanisms through the mutual assistance provisions of the treaty.
And one more small...
I couldn't tell you if there are any cases like that because they don't get reported. And there's no public information about those kind of cases.
Too small.
And they may never have happened. All I'm saying is the treaty, you can't sit... as a lawyer, I can't tell you, hey, don't worry about it. They can't get you. They can. Whether they will or won't is another matter.
Yeah.
Okay, I can't say that. And I don't know whether they've ever done it before. That doesn't mean they wouldn't do it since. I just don't know. What I'm saying is those agreements exist. They exist in the Canadian treaty, the UK treaty, the France treaty, the Italian treaty. Pretty much every treaty has a mutual assistance provision, the basis of which is that the governments agree that if a U.S. national owes tax to the United States and that person is found in a treaty partner, that the United States can go to the treaty partner and say, help me collect this tax.
If you denounce your citizenship, are you void of all of this, or is there...
No, if you have not filed returns for at least 6 years, including the year in which you renounce. You are perfectly at liberty as a U.S. citizen. You have a constitutional right to renounce your U.S. citizenship. All you do is you call the U.S. Embassy, you ask for the passport office, you say, I want to come in and renounce my U.S. citizenship, and they say, thank you very much, Mr. X. We'll be happy to see you here on this date. You'll show up. They'll give you some forms, one of which is called a 4081, which has a whole list of consequences of renunciation, one of which is if you fail to follow through on your taxes, that you can be declared ineligible
On your past obligations, let's say.
Yeah. You don't walk away from any past obligation.
No, I'm not saying that. I'm saying for the future and beyond.
Oh, yeah, from the future. Well, once you renounce,
Yeah.
you go in for a second interview, you swear an oath of renunciation, that gets sent to Washington, you get back a CLN, and as of the date that you take the oath of renunciation, you cease to have any U.S. tax obligations, provided that you file a return for that year, 2015 in this case, together with another form called an 8854, which becomes your final tax return in the United States. But you have to have filed 5 years before that.
Yeah, copy on that.
Okay. Thank you very much for your time and attention.